A very good morning and warm welcome to Moneysense. Your hosts this morning are Christoph Barnett, Neville Hicks and myself, Simon Caudry. On today's show, we're delighted to be joined by Paul Smith. Paul is the CEO and president of the CFA Institute, which is the parent body of the local organisation that is hosting this radio show. What we're going to do this morning is we're going to talk to Paul about the Institute, about what the goals of the Institute are, and about how the Institute is going to make a difference in protecting investors and in some of the activities it's engaged in. So, Paul, welcome to the radio show and welcome back to Cayman.
Thank you very much, Simon. It's great to be here.
I understand you've been here a few times. You've been to Cayman. This is not your first time, though, is it?
No, I guess I've been coming to Cayman for about 30 years, and I can't remember exactly, but 5 to 6 times over that period of time.
Excellent. But it's your first time in about 12 years, you were saying earlier.
It is. I was toured the island a little bit yesterday, and it's remarkable how much it's changed in the last decade or so.
We've got a lot more bypasses and a much higher dump than we had probably when you were last on the island.
All of the above.
So what I would like to do, if we may, is just to start off. This show is sponsored by and supported by and hosted by the CFA Society of the Cayman Islands. And we often get asked the question, what is the CFA Society of the Cayman Islands, but what also is the CFA Institute, and what's the relationship between them? And what does the CFA Institute do? What's the raison d'etre? Perhaps you could just go into a little bit of background about that so that we can have that background as we go through the rest of this conversation.
Sure. The CFA Institute is a professional body. We represent investment professionals globally, but we're not a trade association, and I'd like to make that distinction. We're not lobbying for the businesses that our professional members work for. We're lobbying for an industry that is free, fair, and transparent to all, and represents and benefits not just the practitioners but also the investors. So that's what a professional body does, in the same way that doctors and lawyers and accountants come together in professional bodies. It's not to push a specific industry agenda, it's to make sure that the industry as a whole serves society's needs. We were formed in 1963, so we've been going just over 50 years, and we have a lot of work still to do.
And what are the principal reasons that someone becomes a charter holder? How does one become a charter holder, and why is that important? What does one have to do to actually achieve that then?
Well, to become a professional, like in all professional careers, you have to pass a certification process. So to become a charter holder, you have to pass 3 exams, levels 1, 2, and 3, over a 3-year period. And you also have to have 4 years of relevant professional experience behind you as well. So there are two qualifiers, if you like, the examination process, but also a professional experience process. And if you meet those 2 tests, then you can put the 3 magic initials after your name, CFA, which stands for Chartered Financial Analyst. Okay,
and when you look at the profession, there's 125, 130,000 people who are CFA charter holders. What percentage? How does that compare in terms of the percentage of people in this industry? Because we're talking about the investment industry.
We are.
We're not talking about the general finance, the banking industry. We're talking about the investment industry.
No, and Simon, that's a great point, because it's one of the biggest issues that we face is trying to distinguish investment management professionals from the financial services industry in general, which obviously includes people who work in banks, insurance companies, etc., accountants, etc. So it's our qualification really speaks to people who have a fiduciary responsibility for the investment management of other people's assets. And we reckon that there are about 800,000 of those worldwide. It's a pretty imprecise figure, because obviously that includes people from private wealth management all the way through to people who work in sovereign wealth funds on a global basis. But that would be our estimate. And those people are portfolio managers, risk managers, analysts, people who are involved really in the investment decision-making process. So our penetration is somewhere between 10 to 15% of that market.
Right, and you mentioned the 2 words, fiduciary responsibility. Mm-hmm. Just put that into some context for me and help me understand what do those words really mean? What should someone interpret that? But when they hear that, they say, okay, great. But what should that mean, and what does it sometimes not mean, perhaps is the other way of looking at it?
Yeah, well, I like to think of it in this way, that if you're an individual or a business and you're looking for an investment management professional to run your money, what you're mostly looking for is for someone like again, if you were choosing a doctor, who has your interests placed above their own interests. So for me, that's the best way of describing what a fiduciary responsibility is. It's always trying to do the best for your client first and foremost, and secondarily worry about your own compensation, your own other business issues, etc., etc. So a fiduciary responsibility is really, I think, most simply described as that, putting your client interest above any other consideration.
Right. Now, and I guess that's a crucial thing when someone's looking at hiring someone to manage their money. It would be nice, I suppose, to know that that investment manager, advisor, whatever the title might be, is actually taking that sort of approach. Presumably, what does it mean then for those people who aren't CFA chart holders? Is the risk that they are not necessarily adopting that sort of standard? Where does the industry, where's the spectrum of where people lie in that area?
Well, again, it would be wrong of me to say that people who don't possess a CFA are not investment professionals in that sense of the term, i.e. not having a fiduciary care for others. But again, trying to torture my doctor analogy, when you go for professional care, you want to know that someone has gone through a formation experience, firstly. Secondly, that they subscribe to an ethical code of conduct, which all CFAs have to attest to on an annual basis. And thirdly, that they're committed to making sure that their educational standards, their educational attainments are kept up to date. Now, without a credentialing body, without a professional body, you cannot, as a member of the public, know that those things are in place. You're making a judgment call. So if you go to see someone who has a CFA, you know that all those three things are in place. Education, a commitment to education, continuing education, a commitment to an ethical standard, and also primarily the fact that you have passed a very tough exam to get into the industry in the first place.
I guess with that too, what for the audience, what part we talk about investments, we talk about the investment professionals in the curriculum, but what part or how big does the ethical part of the program make up?
It's roughly speaking 10% of each of the three levels. So it's a major component, and you have to pass the ethical component as well. So it's not something that you can afford to skimp on in your studies, as we all around this table
right.
know.
Absolutely.
In many parts of the world, it's the piece of the program that is most detested by students. A lot of people who take the CFA are quite mathematically orientated, and that's always the part of the program, the curriculum that they like most. The ethical component it makes you think. It makes you think about what you're doing and why you're doing it and who you're doing it for, and so a lot of people are challenged by it.
Paul, let me ask you a little bit about your personal background. Then you've taken the CFA exam, and you've been in the role of CEO and president for.
I passed it as well.
You've taken it and passed it. Sorry,
just wanted to make that absolutely clear.
Right, it's a good point to make, and thank you for correcting me on that. But you've passed and taken the exam, and you've been CEO and president for a year.
Yes.
Before that, you were working for the institute for a couple of years out in Asia.
Yeah.
What made you? What's your background then, and what made you decide to move in from potentially what was the private sector into the not-for-profit sector? What was the genesis of the thought in your mind which caused this transition?
I guess just a stage of life thing. I mean, I entered the. Obviously your listeners can't see me, but I'm 56 years of age, so I'm an old dude, and I entered the investment management world in 1984. So I qualified as an accountant with Pricewaterhouse from 80 to 84, then entered the investment management world in 84. So I was working at the sharp end of the investment management world for best part of 30 years. So I got to the point of my life where really I'd done everything that I was going to achieve in investment management and wanted to see how I could do something that would perhaps give a little bit back, maximize the things that I enjoy in life, which really are the travel. I love traveling, love meeting new people, but also try to do something about the state of the profession today and the state of the financial services industry in general. I thought that was an extremely important mission that the CFA has to improve the quality of the investment management profession for the benefit of society.
Interesting. And you mentioned something there about the state of the financial services industry, which segues nicely to the principal reason and topic for this show, which is the state of the financial services industry. If you pick up a newspaper, it seems almost impossible to read a newspaper without there being a fine being levied on some bank, investment management company, or someone who's worked in one of those organizations. I did a little bit of research, and the top 10 biggest fine payers have paid over $180 billion US dollars in fines, top 10 biggest banks across the EU and US. And when you look at that, you think to yourself, does anyone work in this industry who isn't corrupt, who isn't doing dodgy things, bad things? Because 180 billion amongst just 10 banks seems like a large amount of money. What is the state, in your view, of this financial industry? I mean, is the financial industry symptomatic of the components of the financial industry? What is the state of the landscape as you see it?
We all know a lot of people who work in the financial services industry, and I think we would all say that 98% of everybody we know in the financial services industry is well motivated and ethically sound. The challenge is that when, as individuals, we work in a corporate environment, we tend to have or we tend to excuse conduct at the corporate level that we ourselves as individuals would not tolerate when dealing with one another on a face-to-face basis. So I think there's an agency issue, really, in the financial services industry that is very difficult for individuals to combat, that you're prepared to do things wearing a corporate hat that, as I say, you wouldn't do on a personal level. So I think when I look at how do we correct that, we really have to start with businesses and say to them that if you wish to reconnect with your investors in the investment management industry or with your depositors as a bank, you have to work a lot harder to prove to those individuals that you actually have their interests at heart, that you're not just saying that. Because corporate behavior, frankly, over the last 20 years has been reprehensible. And the fines that you mention are evidence of that. But it's not reflective of people's personal ethics. And I think that's the disconnect, is why do we behave so much more poorly in a corporate environment than we would individually?
Do you think to that point, I guess it's kind of the old behavioral aspect where if you're never going to be punished, or there's no of those 160 billion in banks, none of those executives at banks went to jail.
No.
None of them were personally liable. So do you think that function is probably symptomatic with the issues that are, it's the corporation who's just going to get blamed and ultimately or fined or levied, and ultimately it's the shareholders who end up impacting or being impacted? Do you think that it's kind of a symptomatic problem with regards to the penalties?
Yeah, no, I think that's absolutely right. I think that's one aspect of it. I think it's because most financial services businesses are actually serving two masters, Neville, as well, in that they've got their shareholders as well as their investors to serve. And the paramount interest there is always the shareholders. So if you're working for a corporation, you're much more likely to do things that you think are in your shareholders' best interests than in than in the investors in your investment management products interests.
Right. Now you mentioned that we talked about there have been big fines, and many people have done things wrong, and no one's gone to jail, or very few people have gone to jail because of it. But equally, you could turn the argument around and say, actually, very few banks or very few investment firms have actually been found guilty of anything.
Yeah.
Lots of them have paid fines in order to settle what otherwise could have been trials to prove guilt. And I'm interested in your view on this, because it seems to me as though it's difficult to change culture if you haven't actually been found guilty of wrongdoing. If you simply say, I'll tell you what, you think I've done something wrong, so I'm going to use someone else's money to settle that so that I don't get myself into trouble. How does that change culture within an organization when they say, well, if we are found guilty of something, what we do is we use other people's money to pay those bills, and there's actually no trial, there's no one found culpable on taking responsibility. So how do you address that particular issue?
Well, that's a really a much deeper question, because as you know, all of those fines primarily have been levied out of the US, And the US system is very much the one that you described, that you pay to settle a case, and it's a no-fault settlement action. So I think there's a challenge there in the judicial system as to how do regulators really enforce the impact of that bad behavior on corporations. And most regulators around the world are now looking at that. Codes of conduct, for instance, are becoming much more vital as far as that's concerned, governance codes of one sort or another. But also I think the regulators have taken your point on board, and are looking at ways in which, as you know, under Dodd-Frank and others, other pieces of legislation in the States particularly, how they can make corporate executives personally responsible for their actions.
Indeed. We're going to take a brief break here, and we're going to come back after the break and going to focus a little bit more on the regulation aspect of it and what the CFA Institute can do to help with that regulation. So thank you, and we'll join you back right after the break. Welcome back. We've been chatting this morning with Paul Smith, President and CEO of the CFA Institute, about the global investment industry. In the second half of our show, we're going to turn our focus a little bit more towards Cayman and focus on also some regulatory aspects. Christoph, I know that before the break we were talking about the challenges the industry is facing, and you had a question on the regulation and aspects in that respect.
There's just one additional point I wanted to make, because Neville, you mentioned that none of the CEOs have gone to jail, but none of these CEOs were charter holders either, CFA charter holders. And this is not to say that charter holders have never been engaged in wrongdoing, but as to your point, Paul, getting back to the doctor, that there is a process that the charter holders have gone through with the exams and the ethics and the education and the consistent. We make an annual declaration of a commitment to a code of conduct. And so that's in our mind as we pursue our careers, and so there's sort of a different mindset, I would say.
Yeah, no, and there's also teeth. Like all professional bodies, we have what's called a professional conduct program. So the Institute employs a team that pursues charter holders who do behave in contravention to our code of ethics. And as you correctly point out, Christoph, there are charter holders who've behaved badly over the years, and there always will be. In any group of 130,000 people, you're always bound to have a few bad apples. We're mercifully, touch wood, have a very small percentage of those. But one of the things I'd love to say to the general public is that if you do come across a CFA charter holder who has advised you poorly or behaved poorly, then please do report them to the CFA Institute. We have a process for pursuing those people.
I want to re-engage you on the conversation of regulation. One argument that I've heard people make is that with all the wealth, if you like, of regulation that's been put out there trying to protect investors, you've got Dodd-Frank in the US, you've got the EU doing various things, that actually what that's done is made people a little bit laissez-faire, and it made people not realize the value of being aware and being buyer beware. So I go down the street and I say, well, these guys must be okay because they're so well regulated, they're so well protected, that surely what they do is the right thing for me. Is that a valid argument? I mean, is that something that people need to be thinking about and saying, just because there's regulation means I don't have to take any good care about choosing the right person? How do we deal with that?
Well, I think it's a very good point. I mean, the way I look at a healthy industry is to say that really it's a three-legged stool. You've got the practitioners, CFAs, hopefully. You've got the regulators, but you've also got investors. And each one of them has a responsibility to making sure that the industry is healthy. If investors are not better educated about their financial health, then they cannot possibly work with regulators to ensure the correct regulatory approach, and nor can they select and work with practitioners who are going to be the best in their fields. So it's not as simple as just saying that practitioners have to have the highest standards, that regulation has to be appropriate. Investors too have to take a responsibility for managing their own the process, if you like. And I think again, it's extraordinary to me that people take so little care over their financial health. when you think about how much time the average person spends thinking about their pension pot or their other savings, the advisors that they've selected to work with on those things, it's ludicrous. And really, I boil that down. I sort of look at that and say, well, with a doctor, it's very easy. You go to a doctor and you know kind of within 2 to 3 months whether that doctor's any good or not, because they've either cured you or they may have killed you, basically. But with it's kind of binary, really. With a financial advisor, it's a little bit more complicated, because you may go to a financial advisor when you're 30 years of age, and you may not know for 20 years whether that financial advisor has actually advised you well or not. And so that tends to create a sort of a bit of a sleepy approach to the way that we choose and monitor our advisors. And again, if there's one message I'd like to get through to the general public, it's take responsibility. Make sure that you're actively monitoring what you're doing. Make sure you've chosen the best professionals to look after your money, and that you're involved in that process, and you're not just standing by and abdicating responsibility.
Well, let me focus on that, because you said that if I'm a general public person and I want to take a bit more responsibility, I should do some research. Okay, so I go out and do my research, and I say, well, this person looks like they're professional, they've got this designation. But then I look at another person, I go, well, hang on, they've got a designation as well. And then I go to a third person, they've got a different designation. And I go to a fourth person, and there's a different designation. If you look at the landscape of the investment advisory industry, in about 3 minutes on the internet, I could find 6 or 7 different designations that could be considered reasonable. I didn't necessarily do a lot more research, but they all seem to have reasonable qualifications. They all seem to do the right sort of thing. How on earth, in that sort of context, does someone of the general public who hasn't got investment experience get to understanding what the right designations are, what the right ones are for the responsibility?
I think that's a very good point. It is an alphabet. It is an alphabet
Certainly.
soup out there at the moment, and obviously we believe, and it's generally acknowledged, I think, in the marketplace, that the CFA is the gold standard designation for investment management professionals. But obviously, I'm somewhat biased
So are we.
in making that statement. So regulatory bodies do have a role to play in that, in terms of their local licensing regimes as well. And one of the things that we do is to try to work with regulators to make sure that regulatory licensing standards are sufficiently high, and in general, the world over, they are not, and that CFAs have the appropriate recognition within the localized licensing frameworks. So I think regulators are letting the general public down there, in that they do tend, because they're trying to defend the industry as it exists rather than build the industry that we want. They're too permissive in terms of the people that they allow to advise people on their money.
Well, let's focus on that in context of the local industry. You've got people here in the local industry who are demanding or needing of financial advice, and you've got Cayman as a big financial centre. What does, or what can the CFA Society, the CFA Institute do here locally? How can we make a difference here, and how can we help the general public and investors here? What's the solution? What are the options?
Well, we have a very big community here in Cayman. We have about 130 charter holders here, and that's growing, roughly speaking, by a dozen heads a year. And our local society here, that local society of charter holders, works very closely with their employers, firstly, obviously, but also with regulators to try to improve the quality of the environment here for investors as well as practitioners. So we work with the pension fund authorities here, monetary authority, other regulatory organizations within the Cayman Islands to try to improve the quality of the industry for everybody.
And then the other big thing that happens here in Cayman, obviously, is the hedge fund industry. Huge amount of employment happens because of it, whether it be in people in the accounting, administration. And yet, when you look at the hedge fund industry, it's one of the least regulated investment elements of the investment industry that exists. Do you think that's the right thing? Do you think that there's things that should be improved? Where's your view of what should or what could happen to improve things within the hedge fund industry? Do things need improving? Maybe not.
Well, I'm old school as far as the hedge fund's concerned. I mean, my view is that the sobriquet for the hedge fund world is they're alternative investments. So they should always be outside of the mainstream, and they should never be available to the general public. They're professional investment pools for professional investors by definition. So I'm a little bit radical as far as that's concerned, but then, as I said earlier, I started out in hedge funds in 1984, before probably most of your listeners were born. So I have a sort of slightly different perspective on it.
Yeah.
I think one of the challenges with hedge funds is that they've become mainstream, and that has given regulators an enormous problem of trying to regulate a highly complex vehicle. And we should never have gone that way in the first place. If we remember, that hedge funds are alternative funds, I think it's in the name. It's on the tin, basically. These are alternatives. These are not for the general public.
So a lot of people here in Cayman will listen to that and say, well, there's a lot of hedge fund activity done in Cayman, and you hear all the great stories about hedge funds performing so well. You often don't hear the stories about hedge funds closing down because they haven't performed so well. And what you're saying is perhaps they should be, if they're investing in them, they should only do it through professional investors who are advising them as to what the right thing is for them to do. They shouldn't be looking at it in and of themselves to say, trying to pick the right hedge fund.
No, I think you need exceptionally skilled intermediation if you're going into hedge funds, definitely.
Great stuff. Well, Paul, we are unfortunately at the end of our time this morning, and we've had a great conversation. I appreciate you joining us here.
Absolutely.
And very much look forward to you enjoying a few days here in Cayman and seeing some of what Cayman has to offer. So if I just like to end with thanking yourself, Paul, and thanking Christoph and Neville, my co-hosts, and encourage our listeners to listen into the show on our webpage, where we have a podcast of all of our shows. And if you have any questions or topics that you wish us to cover in future shows, please send us an email to moneysense@candw.ky. Very much